When you start making more money and you start getting in the room with people that are making like 6 figures, 7 figures per month.
If you don't think that making 6 or 7 figures a month is possible, let me show you how anyone can do that just using a trust. So first things first, you'll need to open up a trust, which anybody can do. Now, when you think of a trust, you think of wealthy people that open a trust so they can protect their assets and pass it down to their kids. But what you probably didn't realize is that it's not only people who are already wealthy that open up trusts. People who are broke open up trusts, and they use them to get wealthy. Now you're probably wondering, how do they do it? Well, I'm about to explain it to you, so make sure you save this video. And it may look like a lot, but this is so easy a 5-year-old could understand this. That's why I use these colorful markers to illustrate. So like I said, you open the trust, which anyone can do. And now you need an asset to put inside the trust. And most people will think, well, I don't have an asset to put inside the trust. Most people will just go out and buy a life insurance policy to put inside the trust. Life insurance policies are very inexpensive and accessible to almost anyone. Now, the price of your policy depends on a lot of things, but for the most part, you can get in $1 million policy for anywhere between $100 to $200 a month. The next step would be to put the policy inside of your trust. This would bring the value of your trust to $1 million. Then the next step would be to do what the ultra rich do, which is borrow against their assets. People like Jeff Bezos and Elon Musk don't just have billions of dollars sitting in a bank account. Their net worth is tied to the stock of their respective companies, Amazon and Tesla. So when they need money, they just go to a bank and they borrow money and they just use their stock as collateral. And you can do the same thing with your trust. Because you bought the $1 million policy to put inside your trust, you can now borrow against the value of that life insurance policy. Now, of course, once you borrow the money, you can do whatever you want with it. But the smart people will use that money and they'll go out and invest and buy businesses. They'll go out and they'll buy small franchises. They'll team up with other investors and buy things like apartment buildings. They'll do stuff like that. And once they start collecting the profits from those businesses, they'll go back and they'll pay off the loan that they used to acquire those businesses in the first place and any other debts they may have. And as long as they continue to save and reinvest that money, they're now financially free and can start building generational wealth for themselves and their family.